Hello traders, Chris Capri, secondsguysforex.com. I got another live trade set up for you here. This is a continuation or an extension of the last video on the pyramid trading strategy. So in this video, we're doing the same thing. We're pyramiding into our trades, adding onto positions as the trend progresses. Some of these trade setups I've actually talked about in the website and also in the members trade setups commentary. So what I'm going to do here is I'm going to talk about the first and second trades, what my entry was, what was the price action behind it, the stop, the limit, why I added on to the position, why I felt the market and the price action had shown me something to add on the position, and how I'm managing it as we go along here. So let's get into this. So for those who've been following my daily commentary, I've been talking about this breakout formation here on the pound yen with the series of higher lows while the resistance was staying the same. And so when you see these kind of higher lows printing like this in a with trend direction, it means the bulls are continuing buying it up at worse prices. And they're doing so because they're anticipating that the trend is going to continue. It's also a sign of the order flow weakening from the bear side or the sell side because they're pushing back less and less on the market, which means they're getting squeezed out of the market or they're losing control, and thus the market is becoming more and more imbalanced to the buy side, usually leading towards a breakout. So we had one of those breakouts here. We actually kind of had a brief flush, and I'll get into this here, of stops on both sides, which sometimes can be common. You have to learn the difference of spotting when that is going to happen and when it's not. And even if it does happen, that doesn't mean the breakout isn't a good breakout. It just means they cleared out the weaker players, and then they're going to move the market in the direction that the market was going to go anyways. So we have that here with a little bit of a flush on both sides of the market. But then the market kind of finds a set of value just above these peaks right over here, right around the 20 MA. And instead of selling off aggressively and then continuing with that sell-off, the market is bought immediately back up. Now, the only reason why that would happen is that if strong sellers come in and they immediately get kind of an about face in terms of the buying presence, then the buyers are taking over control of the market from the strength of the sellers, showing that the buyers have greater control still. And that usually means that the breakout is going to happen. And so now that the weak players are out, now it's time to get in. So as soon as this candle had literally, kind of broken above this peak over here, I literally bought on that point right over there. I wasn't waiting for formation. I wasn't waiting for confirmation. I wasn't waiting for a price action signal like a pin bar or engulfing bar or anything like that. I just bought because the price action communicated to me that what was going to happen. And so after a weak rejection after that, never even making it below the 20 MA, the market has since pushed above it, went right back to my entry, found buyers again, and has since pushed higher. So that trade has been confirmed at this point. Now, why did I put the stop on the initial trade right here at 185.72 with an entry at 186.06, so about a 34-point stop? I felt like this set of peaks right here would pretty much hold, that buyers would step in right around this area. And when they did that and pushed right back up, I felt like, okay, it should hold a second time around there. So I literally put my stop just below these peaks right over here and said, okay, I'm going to put it a little bit towards the lows of this little push right over here. That ended up playing itself out and worked out just fine. Now, after holding above this level and pushing higher, even showing another mini breakout formation in the larger formation, the market then exploded higher, just coming close to 187 before finding sellers again. Now, if you look at this candle right here, you can see a very long rejection candle here. So a lot of buyers stepped in right about this level here again. And so that communicates to me, okay, buyers are willing to come in on pullbacks. So if we get a weak corrective pullback into that level, I'm looking to buy. So let's zoom into the 5-minute chart and I'll show you what I saw and why. So this was the first large pin bar that you saw. Looking at the price section when I woke up again, and then notice this price section here in the morning, we came right back towards these lows again, literally within a pip of it, and then started to find buyers. And I said, okay, I feel like the market is going to hold. So what am I going to do? I'm going to buy as soon as we get above these kind of resistance level right over here. And so I literally bought on this one here at 186.41. My stop was placed below the intraday low, literally by a pip below it. So I have a stop at 186.24. That's a 17-point stop. And so even right now, I'm already up about 38 pips. So I'm already up plus 2R. Remember that thing I said in one of the prior videos about how you should be able to get plus 2R inside a day? This is, again, another example of that. Didn't take long, about 8 hours, and we're already up plus 2R in this trade. And again, you don't need very large stops if you have efficient entries. You only need large stops if you have inefficient entries or suboptimal entries. And those are considered what we call retail entries. So retail traders generally need larger stops because they have inefficient entries or they have suboptimal entries. If your stops are large and if your entries are inefficient, then you're generally getting a suboptimal or retail entry, and that's something you need to work on. So looking at my entry over here, the market pretty much consolidated right around this level, showing that the buyers were able to accumulate after a sell-off initially to start the day. The buyers were accumulating right here, and then they've now launched higher and broken out of this, heading towards this highs here. Worst case scenario, I'll take profit here, and that would be about plus 3R on this one here. Almost plus 3R, so that'd be about 50 pips profit with a 17-point stop. So that would be about a plus 3R. If the market looks like it's going to get stuck there, then I'll just close that one. On the current trade, I'm going to trail the stop in a moment here, and I'm going to bring it probably up towards these lows or maybe below this peak right over here. In terms of my long-term targets, those are pretty easy. I've even written about those ahead of time. So since we're hitting multi-year resistance, we have to look at multi-year charts. And so I'm suspecting the market will probably get stuck right around here, which is about 190. It's also a big figure, so there's probably going to be some option players and some profit taking there. So I'll look to take profit just before that at about 189.5, maybe 189.75. So with those two trades, going back to the first trade here on the smaller time frame. So the first one, I have an entry at 186.06 and about a 300 pip target on a 34 pip stop. So that's just under a 10R. It's about a 9R on that one there. The second one, I have a 17 pip stop, and that one has about 260 pips plus target on that one there. So you do the math on that one, and that's a plus 15R. Is it going to get there? I don't know. But again, I'm using the same principles that I talked about in the last video in terms of scaling into positions. I'm doing this with live trades on my own money right now. So this is how we trade. This is what we teach people how to trade in our price action course. And so, I know a lot of people have shown textbook examples of how to pyramid trade, but they've done it with charts in the past tense and they've never shown their live trades. I'm showing you how I'm doing it with live trades, with my own money in real time, and how I exactly scale in the position. Not some perfect looking charts. No, how I'm actually doing those trades, how I'm really doing it. And so this is, again, an example of the pyramiding trading strategy. If you want to make trades like this, if you want to learn how to get really efficient entries, get high R trades, grab plus 2R trades in a matter of hours, then check out my price action course where I teach these exact same methods and strategies. I'll also be going over some live trades for the members as well in the upcoming days here in 2-3 days when we got a private member webinar. So if you'd like to join us for our private member webinar, come join us on the price action course or check us out at secondskies.com. Make sure to subscribe to the YouTube channel and comment below. Until then, I bid you all adieu. Good luck trading, everyone. The final target on that one is 123.21. So we're talking a 912 pip target with the 46 pip stop loss. That's a 19.8 R. Will it get there in a straight line? Possibly, possibly not. It may. The market may start to reverse here, collapse below these lows, and then trigger my stop at 1R. That's a possibility. But if it can take out 116, and as the market progresses, I'll trail along and continue to lock in profit and take advantage of it. If it could stop right around here, which is just around 86. Of course, being that we have the big figure at 85, the market could stop there as well. And so that's a possibility that the market will slow down there. I don't anticipate that we'll have heavy buying interest once we get below 86. So I think at 85, it'll be more like profit taking. But with the possibility that there is a strong bounce, I am open to exiting.